let's dive deeper into not only what to expect from the Federal Reserve meeting this week, but also that existing home sales data we saw cross the wire just a few moments ago. Dean Maki is the chief U.S. economist for Barclays Capital and is quite accurate when it comes to forecasting. According to the data we keep here, we call him a Bloomberg Bass. Dean, welcome back to In Business. What's your reaction to existing home sales? Is this the worst of it, 6-month low?
Well, we did see a dip today, and that was expected. It came in right around where both we and the consensus looked for this number to come in. We do think that the storms that hit both the Midwest and South did depress home sales somewhat in May, and we do look for that to reverse as we move into the June-July period.
June-July period, we might see a bit of a reverse there. But overall, we already knew this was the weakest industry in the country. I mean, for the Fed itself, you're expecting the real headline out of these meetings to be that they're going to lower their own growth projections for 2011?
That's right. We do think that the Fed will follow what nearly all private forecasters have been doing over the past couple of months, which is to lower their growth forecast for the first half of this year. We would expect the Fed still to look for stronger growth in the second half, but they will be revising lower their 2011 forecast.
To what exactly? What are you expecting?
We would expect their forecast to come down somewhere in the 2.7 to 2.8 range. Currently, they're above 3% on that number.
And what do you expect them to cite as the reason for that growth being eaten into? Is it simply the rise in commodity prices? I know you think that monetary policy has been adding to price gains.
We would expect them to refer specifically to energy prices as a drag on activity, as well as the disruptions from the supply chain from the Japanese earthquake. So we would expect those factors to be cited as the reason that growth has slowed here, and that also is why they do expect growth to pick up, in our view. They'll expect, given the decline we've seen in gasoline prices and what is likely to happen in the easing of the supply chain disruptions from Japan, both of those look better in the second half than in the first.
Now, you do expect behind closed doors the conversation to be about inflation targeting, but at this point, you don't expect the Fed to come out with a decision on that, right?
That's correct. We do think that is likely to be a topic. The Fed will discuss that, but we think it's unlikely that in a single meeting here they'll be able to work out all of the kinks and come out with an official target this week. We think that's just too soon.
You know, Bill Gers of PIMCO, everyone in the market listens to quite a good deal these days, said today that the government needs to do more beyond a payroll tax holiday to encourage job creation. Are we going to hear anything from the Fed chairman as to what Washington should be looking at?
I think what Chairman Bernanke will speak about if he's questioned about fiscal policy will be the need to raise the debt limit. He's quite concerned about the negative ramifications if they don't raise it, so I think that will be his main focus.
Which would mean that he's not going to support a government program that would add to that deficit, right? That would include further spending?
I don't expect him to call for further stimulus measures after tomorrow's meeting. I think he leaves that to the political forces. The politicians are to decide that, but I think he is much more concerned about the technical and market implications of a failure to raise the debt limit.
Well, thank you very much, Dean Maki.